Welcome to the Tax Alpha Solutions Podcast, hosted by Matt Chansey. Matt is a tax consultant, author, and certified financial planner with almost 2 decades helping his clients grow their net worth. On the show, Matt brings together an array of specialists to share with you their experience and success along with strategies of the 1%. Matt Chansey is with Coastal One, member FINRA SIPC. And now, here's your host, Matt Chansey.
So good morning, everyone. This is Matt Chansey, and this is another episode of the Tax Alpha podcast. Today, we have a special guest, John Hurley from Hurley Tax Law. He is an attorney with an LLM in taxation, and his background, he's seasoned tax attorney, extensive history in leading tax controversy teams, providing tax solutions for complex transactions and corporate restructurings for some of the world's largest multinational corporations during the full life cycle of tax controversies and tax planning. So he's done tax audit defense, administrative appeals, tax litigations, collections, and then ultimately tax planning. Recently spun off and opened his own practice. And so we're here today to talk about the things that he's learned in the past and how he plans to better serve tax clients in the future. John, thanks for coming on board.
Thank you for having me, Matt.
Absolutely. So, your history, I looked you up, you've worked with some major multinational companies, and I'm sure that provided a ton of opportunities for you to learn and practice different things. But, now you're spinning off and opening your own tax firm. So, what was the impetus? What caused that to happen?
I think I've always wanted to have my own practice. It's something that was always in the back of my mind. However, I enjoyed for many years working in-house with a lot of different companies, managing the audits and the controversy, and then going over to tax planning. But I think really where my heart is at is I want to represent taxpayers, whether it's, individuals that have issues with the IRS or Department of Revenue, or corporations. And those can be, mom and pop corporations, mid-size or large. So I just really feel like this is the time for me to get out there and start my own practice.
There you go. There comes a point when we're all ready to pull the trigger to make a move, right?
That's right.
So good stuff. So tell us, for a lay person that may not completely understand, what is tax controversy work? What is that?
So tax controversy, and I'm sure everybody can relate to this, it's when you get that either, usually it's a letter in the mail, and it could be from, the Internal Revenue Service, or it could be the Department of Revenue of your state. It's a tax authority where they want to inquire further about, a tax return that you filed. And they're asking, usually it's specific questions, maybe that they noticed within your return that they want to know more about. And so they reach out to you. So at that point, you're usually going to commence an audit. And so that tax controversy starts there, and then eventually can end up in an assessment or a no change, depending on what the authorities find. So they'll look and they'll want to adjust your return if there's things they feel are improper. And from there, it may have to be appealed. And so the tax controversy is sort of that life cycle of starting at the audit, from when you get that initial letter, all the way through the audit, and then possibly into appeals to try to resolve it.
Sure. Okay. So I think when the average person hears the term audit, I think it comes across as a terrifying, like, oh my gosh, I'm going to get audited. But help me, isn't really an audit just you did something curiously on your return and we want to take a deeper look at it? And an audit in and of itself doesn't necessarily mean I'm in trouble, right?
I would agree with that. I think it is a situation where, the tax authority it could even be automated within their system. Perhaps certain things aren't matching up, certain information that they're receiving from other sources, and it bounces it out. And so they're inquiring as to, whether or not that should have been included or excluded from your return. It could be something as simple as that, or a mathematical error, or it could even be something where the tax authority has found something in public disclosures and they want to inquire further. It doesn't mean necessarily that you've done something wrong. However, obviously you want to proceed with caution. It is the tax authority and they are asking for a reason, but you want to certainly cooperate. But it's at that point that you have to ask yourself whether or not you want to bring in a tax professional on your side as well. It's not required. However, a tax professional can be quite helpful in helping you to understand, what the questions are, and kind of maneuvering through that and working with the tax authority to try to bring it to a resolution.
Sure. If nothing else, to help you feel a little bit better about the whole process, to tell you that I've gone through this numerous times before and it's going to be okay. They're not going to kill you, right?
That's right. That, they're people too. They have a job to do, and they're trying to do their job to the best of their ability as well. And as long as everybody is, working towards that same goal and trying to determine what's appropriate within the tax return, I think everybody has the right spirit.
Sure, sure. Well, and there may not be an answer for this, but I want to lean into this question from a curiosity standpoint. Are there a few things that you could potentially disclose that are kind of known triggers for an audit? Are there a couple of things that right out of the gate are more likely than not gonna start an audit process?
I would say, going back to at the very beginning, I would say a non-filer. If it's a situation where perhaps and it doesn't mean that you did it intentionally. Perhaps, let's say on the state side, maybe you have a presence in multiple states, with a business or just a physical presence yourself. And maybe you weren't aware of the fact, or maybe you went and did business in certain jurisdictions. So you have to kind of understand what their rules are with regard to whether or not you're required to file a tax return there. So it could be something as simple as that you didn't realize it, but you actually did need to file a return there, and maybe you didn't. So that came into the system and red flagged it. As I mentioned too, it could be something as simple as informational returns they receive from other sources that show maybe certain income. And then the question is whether or not you had included that in your return. So they're trying to match the information. So those types of things will usually spawn an audit. There could be other situations. Maybe it's intentional on your part where you're taking certain tax positions that you're taking because you do believe that you have a good position for it. But it may be known as well that perhaps the tax authority may have a different position on that. So, when you take those positions in a return, you have to, in the back of your mind at least, consider the fact that it could flag it for audit as well.
Okay. And I guess so I'll lean into that a little bit. I guess if we're taking a tax position on something that could create an audit, maybe that's something we did that was outside the norm from a tax planning perspective. And that's the position that we took that this should ultimately work for us. Are there, so here's what I know a little bit about that. There are certain strategies out there that you have to, that are on the IRS's Dirty Dozen list, that you have to file a material advisor form, right? That you have to disclose that this type of stuff was done. Many of those type things but that's what we're talking about when we're talking about taking a position that the IRS might say, hey, we need to look further into that.
That's correct.
Okay. Yeah. Makes a lot of sense. Right. And so that's, I guess, why they have the material advisor process where you raise your hand and say, hey, we did something that we have to notify you on. Right.
Yeah. There are certain types of transactions that may require disclosures, informational disclosures, along with the returns. So in those circumstances, obviously, where it's required, you would want to do so. And then it could just be situations where it's a non-disclosure item, but it can be triggered for an audit because maybe it's a certain type of deduction that they're looking for, or it could be the size of the deduction on a specific item. And so those can be triggered for audit as well. But as long as you're aware of that up front and you're taking those positions intentionally with good arguments as to why they're appropriate, then yeah, if it goes up for audit, then that's the time in which, it's a discussion with the tax authority on your position.
Sure. Well, see, and I think so this is something that I do in my business and I educate clients all the time, right? As I say, most tax professionals are shooting for the goal of zero tax risk, put all the numbers in the right boxes on the right forms at the right time, and absolutely never get a nasty gram from the IRS on this deal, right? Mm-hmm. And I would argue that as a business owner, right, you are used to making calculated risk on, risk off decisions. Should I hire a new employee? Should I buy that new vehicle? Should we expand into a new product line? And none of those things are guaranteed. There's if it works, here's the opportunity. And if it doesn't, here's the cost or the risk or the expense or whatever, right? So I always say, why wouldn't a business owner look at their tax return the same way? If I can do something that might be a tad more aggressively, but I have the grounds to make a reasonable position and say, here's why I think this applies to me. It comes down to, is the juice worth the squeeze, right?
Right, and that's where you bring in tax professionals on the front end. Before you file that return, have it vetted. Have it vetted with, the tax professionals, whether it's the CPAs, the attorneys. Have them look at it, have them analyze it. Make sure that it is an appropriate position that can be defensible. If that is the case, then you have a right to take a position that's defensible that you believe is appropriate. But again, it's a give and take with the IRS or, with the Department of Revenue. It's not a guarantee that it won't be adjusted. It's not a guarantee that it won't, have to be appealed. And even maybe there'll be a adverse decision. If it's an area of the tax law that's, a shade of gray or hasn't been fully developed or defined, then that's, that's why you bring in tax professionals to analyze it and figure out what's appropriate for your fact pattern.
Sure. Makes a lot of sense. So, okay, let's go there a little bit. This is fun. So let's assume that we do some sophisticated tax planning and we feel like we have an argument on something, but then the IRS certainly wants to take a deep dive. They want to take an audit on it. So now we're in that defending this position, so what are the range of outcomes if we're defending a position? I mean, can the IRS, in a worst case scenario, I'm assuming they could probably throw us in jail and do a whole bunch of bad stuff if we were completely fabricating and making up all this stuff and didn't have a leg to stand on. But assuming that we're doing real planning and have a leg to stand on, what are kind of the range of outcomes that could potentially happen when we think we made a real argument when we're doing some tax planning?
Sure. So what would happen is, and this is hypothetically, but on audit, if the tax authority is strong in their position, then they may make their adjustment in their favor. And so in other words, let's just say it's a deduction. Maybe they deny your deduction on specific grounds, and they would assert those grounds. They would tell you why they're denying it. So you would have a right to try to internally with the tax authority, have discussions, see if you can resolve it there. If not, then you have appeal rights. And so normally it starts administratively. You would work with that specific tax authority within the administration, within their process, to try to make your arguments. You would bring your legal arguments, you would apply your facts to it, bring your evidence as to why you think it's appropriate. And it's sort of, at that point, usually it's an informal conference in front of an appeals officer or a decision maker. And I'm talking very broadly here because when you're talking about the states, it could be different in every state as to the process. And then you have the federal as well. But in a lot of the jurisdictions, that appeals officer also may have authority to make settlement. And so that's one of those things where they kind of weigh, whether or not it's an issue. They look at the facts, how strong are your facts, how strong is the law on both sides. And they can kind of weigh that, and they can make a decision as to whether or not they want to try to settle the matter. There's potentially mediation that might be available, like alternative dispute resolutions. So there's different bites at the apple. From there, you may have to go to a more formal venue, like a tax court, if you're not able to agree at the administrative level, and you just sort of walk it through the process. You end up in tax litigation, and at the end of the day, there will be somewhere along the line that if it's really that ambiguous and needs to be determined, there will be a decision made as to what, that jurisdiction believes is appropriate for the law. But you may or may not get to that point because you may end up settling along the way as well. It's something that gets weighed.
So many steps along the way in the opportunity to be able to work it out before getting all the way to something like a tax court type deal.
Right, or even a district court. Yeah, there's definitely a process, and there's different venues that you go to along the way.
Sure. And look, obviously this is all generalizations. We're talking from a high level concept, but what would be the amount of time that it would require? Because that's one of the biggest things when you're talking to a client is if the IRS were to want to take a deeper dive at this, there's two things, right? There's the time I have to spend defending my position, and there's the cost associated with defending my position. So, what's the typical, is there a standard? Is it any relation to the amount of tax that you ultimately saved, like, as far as time and cost, or is that not really a factor because the hours are the hours, whether you're saving 10,000 or 100,000, right?
Yeah, I think it comes down there. There are definitely multiple factors that play into it. It depends on how entrenched both parties are on their position, and how strong is the law on one side or the other? Is it truly a situation where there are colorable arguments on both sides, and so it needs to kind of go up the chain as far as decisions that are made on it.
Sure.
It also comes down to how complicated the fact patterns are. Are you dealing with a multi-billion-dollar corporation that has a very sophisticated structure and sophisticated fact patterns, or are you really just dealing with like one isolated fact pattern that's pretty simple? So it's hard to say. You can't necessarily measure it by dollar amount as far as what the adjustment is. I would say it's more how complicated the facts are, how large the evidence is. Is it millions of transactions or is it one transaction? So there's a lot of factors that come in, but it can take. With that said, it can take years to fully resolve it. And again, it's not that you can go along the way and you have different options, even of alternative dispute, where you could look at resolution, where you could look at like mediation. You could look at potentially settlement if the Department of Revenue or IRS is amenable to settlement, given the facts involved and the law. But there'll be different points in time where perhaps you can resolve it and not have to fully litigate it. But to fully litigate something, going from almost audit, let's say administrative appeals right after audit, all the way through can take certainly years.
Sure, makes sense. I've heard that, and you can speak to this, I'm sure, that after you file the tax return where you're potentially using an advanced strategy per se, if it's the IRS wants to take a look, they have 3 years from the date that you file your tax return using such strategy. Is there?
Yeah, so generally speaking, there's a different statute of limitations that play in, and that's with regard to assessment. So yeah, you'll hear as a matter, individuals will say that, the IRS has 3 years in which to audit and assess on your return. But like everything, I wouldn't hold fast to that. There are exceptions to that rule as well, to say it's only 3 years. And if you say, well, what do you mean exceptions? Well, the most obvious exception is if you didn't file a return, then there is no statute of limitations. So, in that case, it could be open for forever, theoretically. And then there's other scenarios, in between. So, but yeah, as a general matter, people will say, oh, it's about 3 years on the IRS side.
Yeah, well, that kind of follows into why we need to keep our tax records for so long. If we're going to do something and they got 36 months to send us a letter before we ever really start that, that informal process or that mediation and everything else, it could be 5, 6, 7 years down the road that I'm going to have to go back and build my case and show all my documentation. If I haven't done a good job of holding on to all that stuff, it's going to be hard for me to support my case, right?
That's correct. Yeah, that's
Yeah.
very important. If you realize that, upfront as you're filing returns, if you feel that there are positions there that, could be audited and you want to defend those positions, and it's smart to sort of, I call it an audit ready file, but basically contemporaneous to putting together your tax return, be thoughtful in that. And you may want to put together the documentation that's going to support those particular transactions or positions. So that way you're more ready when an audit should arise, rather than being caught off guard years later and thinking back on exactly why did I take that position. I know I felt I had a good position, but that was 3 years ago. Now I got to really think about it.
Right.
So do it while it's fresh.
Yeah, makes sense. That's a good audit ready file, just in case the guy walks in, you're like, I'm ready to go. Here you go. I've been waiting on you to show up, right?
Exactly. And then and then it becomes a little bit of a dance as far as, you will be given information document requests. It's not to say that the moment that they knock on your door to just, drop a file on their lap. It's more a situation of, as they're asking the questions, now you'll be able to properly respond to those specific requests. You can kind of go through your file and say, oh, okay, well, here's what I gathered for that specific transaction I think is appropriate, and responsive. And it may be tailoring even what you have. Maybe, of the 300 documents you gathered, you only need 5 of them for that particular, request. So then you would give those 5 and, you do the back and forth as you go along.
Sure. Okay, that's great. I like that line of questioning. And so, now based on, so recently we had some legislative stuff that's trying to pass the Inflation Reduction Act of 2022. And one of the big elements in there was, they're going to spend a whole bunch of money on the IRS and they're going to hire a whole bunch more agents for enforcement. And I feel like that plays really well with the conversation that we're having. So how do you view this, this Inflation Reduction Act and the hiring of all this enforcement into that, that conversation about, doing planning and then having them come back and look at it and understand how's that going to impact those taxpayers?
Yeah, so I think, so specifically there was about 80 billion additional IRS budget over 10 years. And of that, approximately 46 billion was earmarked for tax enforcement. So yes, that will be pointed towards the tax enforcement effort, which would include employees as well, I would assume, as well as them. And it's out there. When you look at the act, you'll see, the different things in there. It's looking at everything from, bringing up their technology, more up to date, more efficiencies there, hiring more employees. But what people have to understand is that the IRS over time has had attrition as well. And so I think it's twofold. Some of it will be kind of backfilling where they have retirements. But most certainly there will also be, I believe, more auditors that will be hired. And so, yeah, you would expect as a result of that, with the efficiencies they gain, that there will most likely be more audits that will result from that, and maybe more efficient audits, on the hopeful side, that they're looking at specific transactions rather than making it, a more broad stroke. But that's, something we'll have to see, what happens. But at the end of the day, I do believe that it will be a situation where there will be more audits spawn from it. From their perspective, if you look at the way that it's being discussed from the government perspective, I think they're targeting more of the large companies and certain individuals that are more high net worth. But that's all yet to be seen. We'll have to see how the money's actually allocated and spent and used.
Sure. I've seen since that talk in the bill that was about the dollars for enforcement, I had read a couple articles recently that showed the technology that the IRS is actually using, or I guess you could almost say the lack of technology that the IRS is using. And it is shocking almost how antiquated many of their systems appear to be and how super inefficient. So it's just shocking to me that they kind of waited so long to do this, like how there hadn't been periodic improvements of the process. It's almost like they need to go back and tear down this 50-year-old monster and kind of redesign it from the ground up based on what I've seen.
And I think that's fair. And that's why when you hear 80 billion, yeah, it sounds like a lot of money for sure. But yeah, you have to come from that perspective as well, that, hopefully a lot of it will end up making the IRS more efficient, including, when you make that phone call, when you have an inquiry, where, hey, did you receive my tax return? Or, hey, I made this election on a form, what's the status on it? Hopefully with this money, it actually will be used for that as well. And therefore we'll find the IRS becomes even more efficient over time, which actually would benefit everybody, right? I mean, that's the positive side on it.
That's the blessing with technology when it's used appropriately, right? It improves our quality of life to some extent, and makes, I don't know that humans are ever going to be completely replaceable, or at least in my lifetime, but the technology is supposed to make humans more efficient, more effective. And, so even if they can't get the body count that they need, if they give them the right tools for the job, the IRS agents might have, be able to get more work done and have a better quality of life doing it. And hey, no one ever wanted, said, I don't want to talk to a happier IRS agent when I get them on the other end of the phone, because their quality of life is better, right?
That's true, most certainly. They're human too, and they're there to do a job. And so, yeah, it's nice when everybody is happy and working together.
Yeah, I think too many people think it's not a personal thing. It's just they're doing their job. This file hit their desk for whatever reason, and it's their job to follow up on it and go through. It's not a personal attack. So, it's just help them do their job better and more efficiently, and get out of the way if you ultimately can. So
that's right.
So interesting. Oh, great. I love that feedback on that. I've had a lot of people ask about those questions about all this money and stuff that's spent on enforcement. Like what's that ultimately going to mean? So, you have been doing controversy work for big corporations and tax planning, and now you're kind of making this pivot to where you're starting your own practice with your years of experience. Clearly, you know what you're doing, and finding your own clients and doing it a different way. So are there going to be, or in the future, are you looking for those large corporations to work with, or are you looking for more of those maybe mom and pop, small business owners or smaller business owners per se? Where do you feel like the opportunity is for you to be able to pivot as you launch this new endeavor?
Yeah, I see the opportunity really is pretty broad. I certainly can help large corporations. It's something that I've done for many years, so that's certainly in my wheelhouse. However, I enjoy helping individuals, that have matters where there's concern, because I know for them, there is an emotional side, right? There's a human side to it. Going through an audit is not a fun thing. So I would love to be able to, guide them through it and help them, whether it's at the audit level or if they've already received an assessment, maybe they need to appeal it, or maybe they're even in collections and they need help with that. And also, yeah, the mom and pop and the mid-size companies as well. I know, it's very hard for the mom and pop companies and mid-size to, bring a tax attorney in-house. It's just not something that's done. It's cost prohibitive. So really, when they need that expertise, that's where they can look outside of their organization and look for whether it's a CPA, if they feel that that's the right professional for them, or it can be a tax attorney, to help them at different levels. Now, it depends on the level, because at certain levels, it does require a lawyer to be involved if you want to, let's say, litigate it in court. But I feel like there's a very broad stroke of people and corporations that could probably use that help.
Sure. Do you think, and I don't know the answer to this, and can a tax attorney be more effective when trying to work with a taxing authority than potentially a CPA or a tax professional because they are an attorney? Is there certain things that the attorney can do and add value in a way that a CPA can't, and or vice versa?
Yeah, I would say it's the vice versa, right? That the interesting thing, and the reason I love tax, is because it is multidisciplinary, right? It's not, 100% law. It's not 100% accounting or finance. Even economics gets involved, right? Tax touches everything. And so I think there's a place for everybody. When I was in-house with different companies, I had individuals that were working for me within the controversy group that were CPAs. I found that their skills were very necessary because they could really get into the general ledgers and they can reconcile things and they could look at it from a GAAP perspective. I'm not an accountant, so I would look to them heavily on those items. With that said, on the legal side, my brain is mapped that direction. So I'm looking at the statutes and I'm looking at the case law and whatever rulings are out there, and asking myself, well, okay, accountant, you reconciled it, you got me the numbers, but I still need to understand, in my head from a legal perspective, is that appropriate? Does the law support that position, whether it was taking a deduction or whether saying something was tax-free or non-taxable? So that's where I think it's sort of the marrying of the two. I think, they both have their place. And sometimes, depending on how complex your audit is, it may be a teaming, that you require, that you want an accountant that's sort of combing the books and records and making sure the evidence is submitted a certain way. And then the lawyer is reviewing that submission before it goes to the IRS, the Department of Revenue, to make sure that, it's in the best position possible, given the question, given the law and the facts.
Sure. Makes a lot of sense. And that's, I should have anticipated that, but at the end of the day, it's a collaborative process, right? Because there's different people involved that all have different training, different backgrounds, and think a little different. So they see it from a different lens, and together with those people, advocating for you, they can come up with a good argument to be able to defend your position. So, I think clients all want a collaborative process with all of their professionals, but I'm just not sure that everybody gets that. In my experiences, I've seen too many great professionals be, let me say good professionals, and I don't want to roll that back too far, but they're defensive of their clients. This is my client and I work with them and I help them. And sometimes that has created an impediment with sharing information on one of your better clients with another professional, because you're kind of protective of those people as your client, but yet for them to get the best outcome, you kind of need a collaborative process, but that's hard for some professionals to lean into. You experience that?
I would agree that, by having that collaboration, you're certainly going to get, the best product possible. And certainly everybody's heard the stories, of, maybe somebody even who doesn't handle audits on a regular basis and is more of a compliance person, but well, they handled the return, so I'm going to have them, deal with the Department of Revenue. And that's not to say that there are many tax professionals that are capable, to handle the audit, an accountant or a lawyer. But, there are some times that you hear those stories as well, that, well, if they hadn't done that on the audit, then it would have been a little bit easier now for me to position it for appeals. But now, it's been put into this light. So now you kind of have to work with what you got. So it's just nice at the onset that whoever you're dealing with, and it can be an accountant too, controversy, but they're controversy minded, that when they're given a document to the Department of Revenue or IRS, they understand exactly what they're giving, why they're giving it, and they're making sure that their response is appropriately tailored to the question, that they're not just knee-jerking it and saying, oh, they want, the GL for this, okay, just give them the whole thing. And you're like, well, wait a minute, they didn't ask for the whole thing. They're really just trying to look at this transaction. We really need to tailor it, and we need to put it in the right light for them.
Yeah, don't open Pandora's box if it doesn't need to be opened unnecessarily, right?
Yeah, always be controversy minded. Understand whatever you're giving, there's a purpose why they're asking. And so whatever you're giving should be tailored, for that purpose, and in understanding your facts and positioning your case in the best light possible.
Yeah. It's funny. I think in the tax, legal, financial world, this isn't as obvious or as evident as it is in the medical space, right? Like, we all have a general practitioner or a primary doctor, and you go to the primary doctor for years, and that's the person you have the relationship with. But if one day you're not feeling well, then they run some tests and it turns out that you got a heart problem or a brain problem or a cancer problem or something. They don't just throw you up on the table and try to cut you open and do it themselves. That sounds crazy. They send you to a specialist once they triage it out. And I think in our world, right, the tax legal world and all that, many times people think that they're one professional they already know can wear all those hats effectively at the same time. But it's really more closely aligned with the medical community and the fact that there are specialties and subspecialties than I think the average person realizes.
Tax is such a broad spectrum of topics, whether you're talking state and local, are we talking sales and use tax, property tax, income franchise tax, whether it's federal, whether it's cross national. And so, yeah, it's one of those things where, yes, there are some people that will practice all those areas, plus they'll, do compliance as well and your planning. And that's fine if that's what you're looking for. But I agree. I think that you really, when it comes to controversy, if you have somebody who kind of focuses on that area, then they've probably done it many times and they understand the nuances of dealing with the tax authority and, proper venues to file appeals. And there are strategies. It's not one size fits all. There are, at different levels, you actually have choices of whether, you want to go to the tax court, or do you instead say, no, I don't think I'm going to get the proper, I think that it's more favorable for me to go to the district court or to the federal court of claims. I just feel on this issue that that's the proper place for it to be heard. So those are nuances that, if you're dealing with somebody who maybe doesn't do that every day, then, may or may not, completely appreciate all of that. With that said, they're still professionals. And,
Sure.
that they'll make their decision what they think is appropriate, but it just might not be something they do all the time.
Yeah. And look, I don't know about you, but if I'm flying on a plane and we're landing, I'd prefer to have a pilot that's landed the plane thousands of times over somebody who's trying to land the plane for the first or the first few times, right?
That's right. Yeah.
That reminds me of a time I went skydiving. I'd never gone and my buddy had never gone, and they're harnessing us in. And my buddy asked the guy that was jumping with him, and he's like, "Hey, how many times have you jumped out of a plane?" And the guy's like, "Oh, about 800 times." And so Kyle leans over to me and says, "How many times has your guy jumped out of a plane?" And I ask him, and he says, 8,000 times. And I'm like, "Kyle, you're going to be fine. Don't worry about it."
Exactly.
But experience matters. Somebody that's done this stuff before, right?
That's right.
So tax controversies where they do the bulk of your work, but then how does that spin into the tax planning element of what you do? Knowing, what's controversial, I guess, then creates the planning opportunities that you can work for. So talk about how that has spawned to the planning side of your business that you're in now.
I think it's pre and post. And what I mean by that is, you have your planning up front. So that's before audit, pre-audit. It's not to say it's in anticipation of audit, because, you never try to be under audit. But the point is that if you're doing certain planning, then again, it goes back to that idea of having an audit ready file that, well, let's think through these positions. Let's make sure they're appropriate, but let's also document them properly. And so if you're bringing somebody in who's controversy minded, then those are the things that I'm going to think about and look at. That, well, if I'm a tax authority and if I am going to audit this, what are the questions I'm going to want to know? What are the documents I'm going to want to see? What's going to properly support these positions? And so, up front, I would be looking at that, if they're going to look at it, you're going to want to make sure you have X, Y, Z documents. You're going to want to make sure that on your accounting side, maybe that you have these types of, whether it's the journal entries or the this or the that. So by building all that up front and thinking through it, and the transaction itself, what is appropriate there. And then on the backside, post, it's looking at, okay, well, you were under audit and the tax authority made these specific adjustments. So let's look at that. Are you still doing that? Going forward prospectively? Have you done that? Usually, like you had mentioned, when they're auditing, it's back years, right? It's not the current return that you're about to file. And so it's asking, or that you just filed yesterday. So it's asking that question. Well, what did you do on that return? Because they just audited the one from 2 years ago. Oh, I took the same deductions there. Okay, well, we got to kind of look at that. Is that appropriate? Is it not appropriate? And then going forward, maybe it was not appropriate, but however, what you can do is what is, reasonable is this or that, or maybe it's just not appropriate at all. So don't do it.
Sure.
So it's looking at that.
Makes sense. Got it. Okay. So if somebody realizes they need somebody with your skill set, tax controversy, tax planning, how do clients typically find you? Is it, they're talking to the attorney that they tend to work with and they're like, I know somebody that's more specialized? Are they talking to their CPA and that person says, hey, it's a little more specialized than what I do, I have a person? Or are people Google searching you and finding you that way when they're like start to get those nasty grams from the IRS and they're terrified and can't sleep at night and they're like, I got to find somebody to help me solve this? So how do people tend to find you and or realize that they need you and want to work with you?
I think it does go back to, as it's been for probably the inception of time, right? It's more of a network of individuals who know who I am, and they know me, they trust me, they like what I've done. And so they don't have an issue, if one of their clients should come up and say, hey, do you know a tax attorney that might be able to help me? So I would say that's the main source that I've had, whether it's accountants, whether it's lawyers feeding me those types of clients. And I think that's pretty common
Okay.
in the practice. So yeah, I would say that's the majority of it.
Well, look, and what's funny is I only know from my lens, but like I learned a long time ago that estate planning attorneys tend to build their businesses on the back of financial advisors. It's a very common business model, right? They're like, hey, you have clients, I'm an estate attorney, all your clients are going to have an estate concern, know that I'm here and you can make an introduction. So I just, wasn't sure exactly when you're, building your business, how the common mechanism works. But hey, I learned a long time ago, referrals are the best business in anything you do, because they come in the door having some understanding of who you are and what problem you're going to solve. And there's a level of trust there that you just can't get by, skimming somebody's website on the internet per se, and saying, I'm going to have a consultation with this person. So it definitely elevates the trust.
Yeah, and it's like we talked about before, right? That tax is such a specific niche that, just because you're an accountant, just because you're a lawyer, it doesn't mean you practice specifically tax controversy. And so that happens a lot too, right? It could be a CPA that's like, well, I do compliance, but I really don't get involved in, dealing with the audits or the appeals, or maybe they do audits, but they don't do appeals. And with attorneys as well, maybe I do mergers and acquisitions, but I don't really get on the tax side as much. So yeah, so you see a lot of that as well because of the complications that come in with tax.
Sure. And there's a whole bunch of nuance. It's one thing to have income tax issues. It's another thing, I know a CPA that basically didn't sleep for like a year because one of her largest clients, a chain of like pizza franchises, had a real big sales tax issue or something like an audit. So completely different than income taxes, but yet at the same time, created a lot of anxiety and a lot of angst around making sure that she got her client through that process in a way that, didn't destroy their business and or her relationship with that business owner. So
that's right. Yeah.
Yeah. Well, good stuff. Well, we've been almost an hour today, and that's kind of how we tend to limit the show. But just anything that I didn't ask that I should have asked that is, relevant to our listeners and something that you want to share, things that we should know.
Yeah, I would say we touched on this already, but, if you are under audit, I think from my perspective, at least, I think it's better to get professionals involved, as early as possible. Again, you can handle audits yourself as an individual or as somebody who owns a business, but it's just remember that these are trained professionals that work for the tax authority, and so they're asking the questions for a reason. And so sometimes it's helpful to bring in a tax professional of whatever type you think is appropriate for your situation. But I think just by doing that, if nothing else, it just helps guide you through the process and make sure that your responses are not only appropriate to the questions, but also kind of aimed at, if this should need to be appealed or adjusted, I'm putting it in the best light possible, under the circumstances. So it's just sort of understanding that. And again, like you said, I think it's important, just because you're being audited, it doesn't mean that you did anything wrong, but you just want to make sure that you're ready and you're prepared for that audit.
Well, look, there's in every crisis event that happens in our life, there are two types of people. There are the people that are prepared and kind of have a plan, and there are the people that are just winging it. And I would argue that the people that are prepared and have a plan get better outcomes, right?
Agreed. Yes.
Yeah, I don't think this is any different. So be prepared and have a plan. Well, John, it was really nice to meet you, and I appreciate you coming on and sharing all your wisdom with the audience today. I think, the people that listen to the podcast certainly have concerns, about, what's going on with taxes and how it's changing and, what the enforcement's going to look like. And, having a professional like your opinion on here, I think might help a few people sleep better at night, knowing that there's somebody to hold our hand and walk us through it when it gets the scariest that it could possibly be.
And I'm happy to do that.
Good stuff. Well, everyone, today, this was another episode of the Tax Alpha Podcast. This is Matt Chancey. Today's special guest was John Hurley from Hurley Tax Law. All of his information will be included at the bottom of the podcast, so you'll be able to find him directly. Once again, thanks so much, John. We appreciate you being on today. And listeners, until next week, we'll see you next time with another episode. Take care.
Thank you for listening to another episode of Tax Alpha Solutions, brought to you by Matt Chancey. We hope you enjoyed listening to this week's guests and insight. If you liked what you heard, please consider subscribing wherever you listen to podcasts.